Hi, it's Aussie Dollar Man with a Forex Form Guide Midweek Quickie for you. Quick disclaimer, this video is for educational purposes only. The markets are open as I record this. This is not financial advice. Trade responsibly. Before we get going, if you do find value in the video, I'd really appreciate it if you could click the like button and leave a comment. It does help me to grow the channel, push Gann's teachings out to more people. The reason for this midweek quickie is the Australian dollar, US dollar. If you're new to the channel, I'm looking for a big crash in the Aussie dollar next month. And while I don't think that crash has started, it does now start to look as though the top has come in. So here's the Aussie dollar, how it looked last weekend when I recorded the last episode of the Forex Form Guide. We had the top up here and a big down bar here. The market was sitting above the 50% retracement, and it was setting up for a potential higher bottom there on the 4-hourly chart. With my timings not due for the crash to start until the end of the month or early next month, I wasn't too worried about this, although in hindsight now, it does look like that is the top. I'm going to talk more about that in Sunday's episode. I'm disappointed that I'm not short out of that top there because there was a great opportunity to do so. However, it's been a little bit of a funny year. The Aussie dollar has thrown so many false signals. I just missed that one when the clear one was there. Important as a trader though, there is never, ever, ever any such thing as your one and only chance to make money. There is always another opportunity. There'll be more opportunities this month. There'll be more opportunities on this market. There'll be more opportunities on other markets. So as a trader, just relax about it all, let it go, move on to the next one. This is the chart now as I record this on Thursday morning. You can see, obviously, Monday we did run up a little bit. This is the daily chart on the left here. We ran up and we double topped on that 50% there, and the market has been running down since there, and that's made me realize that that top is in. And that first lower top there that forms there on the daily chart basically confirms that that weekly top is in, even though it's not technically in until we break the low of the previous week, which was down here, but that top is now in, and that looks like our first section down. The market retraced all the way through to almost 75%, then it's come back down, and then it's retested underneath that 50%. Now, double tops on a 50% milestone there. If we zoom into this chart, this 4-hour chart here, you can see from that run down that was last week and then running up into that Monday top, you can see that is double tops on the 4-hour chart, just under another 50% milestone there. Now, at this point here, I should have realized and put all the pieces together that the big top is actually in and that we are on the way down. I took a short trade here, which I'll talk about in a moment, but I should have hung on to that short trade because I don't think that level is going to be broken. I think that we are on the way down now. Why didn't I recognize that the top was in with all my experience? It could be a number of things. I'm not getting a lot of sleep at the moment with two very young but beautiful kids. To give you an example, my daughter took 2.5 hours to push out a poo last night because she was trying to hold it in case it hurt her bottom. So these are the challenges that I'm facing at the moment. But this is a pretty much bread and butter trade. Here it is on the hourly chart there. You can see a nice little false break of that first top, which I like. Ran up, came back down and closed below there. As a swing trader, you can enter as the market swings down on that bar there. Now, I took a near perfect entry there and I closed that position here. So I captured basically that whole move down there. I'm experimenting with some intraday work at the moment and learning from a couple of people. And I just got a little bit caught up in that, given that I'm waiting for the end of the month for my crash to occur. And I can tell you, I nailed the hour for this low, for this top, this low down here, and this top up here, and this low down here. And the next one was due up here. So I was just in a little bit of a rhythm. I watched the first few go by. I missed them, but I traded that one. I traded that one. And I ran it down to here. Now, I didn't go long because I didn't like the setup there, and I thought there was still probably more downside there, but I got out of the trade, and then bang, off it ran without me. Now, it would be very easy for me to stand here and say, oh, look at this nice clear setup. I got short there, which is the truth, and then end the video there. But really, what for? I'm not trying to impress anyone. That's the truth. I nailed those turns. I nailed that entry there. I nailed the exit there. I should have just stayed short. That's a really good entry. You know, on a small risk there, about 10 points risk, I could have just sat on that for the next month or so and added a few times, and that's my trading done for that month during the crash. Anyway, the reason for this video is not to talk about my mistakes, but to talk about what next on this market. To set us up for that though, this is a move that happened on Tesla earlier this year, and I bring this up because most of you would be familiar with this. Earlier this year, in February and into early March on Tesla, it just tanked, and you can just see the market, the rallies aren't very strong, weak rallies and just sell off, hard sell off, hard sell off, hard sell off. The market really fell apart. If you looked at any of the news at the time, they were smashing Tesla. It's all over for Tesla. There's cheaper Chinese alternatives. People hate Tesla. People don't like Elon Musk. People are burning their Teslas and scratching other people's Teslas, and Tesla bad, basically, was the message in the news. It was all really, really bearish. Well, this particular crash was actually timable using Gann's law of vibration. If you're not familiar with Gann's law of vibration, check out the Ticker Investment Digest article video that you'll find on this channel, which talks a little bit about the law of vibration and it telling you when the market's going to be flat and when the market is going to be really strong and making steep moves like this. Well, that was Tesla. That's where the big move came. But notice that the top in Tesla actually came in December, and then the lower top came in January. And then there was another lower top pretty close to that lower top at the end of the month there. And the crash really started around there. So fast forward to the Australian dollar. This is where we're at. Our July top does look as though it is the yearly top on this market at the moment. And then we've got our 14 August lower top there. This one I can forgive myself for missing. The market was making, higher tops, lower bottoms, higher tops. It was a really wild expanding market there. Then we had our run down here. Over here, I got long out of this section here on the 2-day swing chart, and I thought that we're going up here out of that low there. So I missed this, but I really should have seen it on the Monday as it's come in there with that daily lower top there. That'll just go down as one that I've missed. But as I said, the crash is not yet here. I'm looking for a low today or tomorrow. So the 21st, 22nd of August, looking for a low to come in and then a little bit of a rally. Maybe I put this trend line especially in for my friends at Bulla McKenka. I hope you like it. I know it's a basic technique, but they do still have their uses, and often the market will come up and touch that a second time. But what I'll be looking for on this market, and we'll talk more about this in the Forex Form guide on Sunday, I'm looking for it to make a low and then have a retracement. And when it does that retracement, we'll put a Gann retracement tool over that range or wherever it ends up. We'll put the Gann retracement tool over that range. We'll target some areas and we'll start putting a price cluster together for that. And I think next week, the 26th, 27th of August is where we'll see that lower top. And that will be the top that lines up with the crash. And from there, we'll start to see the market sell off heavily. Now, before I wrap up, I did give out these Aussie dollar, US dollar key dates in last week's episode of the Forex Form guide. There's just a slight alteration I need to make with that. And that's the first one there. Just cross out likely high on that. It could be, but I'm thinking it's now probably more likely to be a low there. I won't go into detail with that here, but those dates all still stand. I'm watching those dates. They have been very, very reliable. As an example, the 14th of August was one of those dates as well. That gave us our top that you've just seen. If you're an Aussie dollar trader, these are good dates that should produce good, strong, tradable turns out of there. Now, when it comes down to will it be a high or a low, just keep this in mind. This is from Gann's book, The Wall Street Stock Selector. He lines up his charts side by side and he applies his form reading to all of the charts and he uses multiple charts to make a decision there. You'll know for most of those whether they're going to be a high or a low before the market gets to them or as it's approaching them. So keep your charts up to date and keep an eye on them, but those dates will all be important. Finally, I want to just tie in these bigger dates with a smaller term cycle that I'm looking at here. So you've got here the 21st of August low. That's today, the 21st of August. So today or tomorrow, I'd expect the low to come in on the Aussie dollar and to have a rally. And then the August 27 high is the next high going up. On the bigger cycle, which I haven't given you the dates for, the date that the crash is due to start is the 31st of August. Now that date is going to tie in with either the 27th August or the 6th September with this smaller cycle. It always does. Now this year has been a tough one because it's been so sideways and so choppy, and there's just been a couple of tricky areas where I'm not sure have I missed an inversion or not. Now that we're getting really close there, this is how I think it's going to unfold, and I think that August 27 is going to be our high for the crash. Now that's coming in next week. That's a Wednesday, so obviously I'll be watching all week, but I'll be watching around there for my charts to give me a signal to allow me to take a smart trade to jump in short and ride that move down. If I can get in short there and get a good run down, and then the market makes a lower top, say on September 10, I'll be looking to add to the position there and keep all of my stop losses at a point of break even or better. But that's where I think crash conditions will begin, and I think they'll run for about 5 weeks or so into late September, early October. That's all for this quickie. We'll be back with a proper discussion on the Forex markets this Sunday night, the 24th of August. Mark that in your calendars. It's going to be a really important one because it's a big week ahead. Until then, all the best with your trading. Enjoy the rest of your week. See you on Sunday night. Bye for now.